Did you know that you could get into a home with as little as a 500 credit score, and you could have a home of your own even if you're a little credit challenged? So today we're going to talk about all things credit. We're going to talk about how to get into a home with a lower credit score. We're going to talk about how to maneuver your credit in a positive direction. And then we're going to talk about all things that are credit related. Some things you want to do, some things that you don't want to do, and how that makes a difference. We're also going to talk a little bit about credit repair companies and what that means and what do they do, and how that's different. So my name is Dawn Robbins with Nations Lending, and let's just jump into this. So step one, on the programs, most lenders, 98% of them, require a 580 credit score for a FHA loan. Nations Lending, we look at it a little different. FHA totally allows for a 500 credit score, and it's a guaranteed loan. That means that if something were to happen, we're still going to get reimbursed. So why not take that extra step and allow clients to get into a home of their own? Now, a 500 credit score does require a little bit more down. Typically, it's 10% down, but there's options for that. So at least that's available to you. Now, the even more exciting part is your veterans out there. If you are a veteran and you have more challenged credit, that is an option. Most lenders say 620 credit score, and some will say up to 580, or I should say down to 580. We will do 500. And again, for the same reasons, it is a government-backed loan, and we want to make sure that our veterans are taken care of. So, regular old VA loan, we do the same thing, but we allow for the more challenged credit. So, let's get into that. Credit, oh my gosh. When you look at credit and in the big overall scope of things and how things are weighed, on your credit scores, the bulk of the credit is 35% is your payment history, 10% is the length of the history, and one of the biggest portions is 30% is your credit utilization. That is your credit card limits in relation to the balances that you have on those credit cards. So what that means is if you have a $1,000 credit card, and let's just say you have a $500 balance, you're at a 50% credit utilization. So the way I look at it is if you're at that 50% mark, it's kind of flatlined. It's not helping you, it's not hurting you. However, if you go over that 50% mark, then it starts to drastically ding you and your credit score. Whereas what I have seen over my 20 years is that if we can be under that 50% mark, then your credit score actually improves. So one of the things that, as we look at your credit, that I look at is, could we maybe pay down something and have an impact to the credit score? Now, there are all kinds of credit reporting companies out there. There is Credit Karma, there's MyFICO, the list goes on of credit reporting services. Now I'm going to tell you a little secret. They all have different algorithms. And what that means is they all weigh things differently. So there isn't really a right answer. And let's face it, the information that they give you is cryptic at best, that says, oh my gosh, well, of course, time always is an improvement to your credit score, and if you make all your payments on time, and if you were to pay all your loans down to blah, 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 the list goes on. What I try to do is look at a more strategic approach to it. So, credit utilization. Now, one thing I will say is most clients will look at if there are collections on your credit report that they want to pay those off and try and get them squared away. I'm going to say, no, don't do that. Because obviously we want to get them resolved. However, if it's a medical collection, we may not look at it at all. And if it is a collection that has been on there and it is your longest reporting history, it might actually lower your score by paying that off. So when we go over the big credit reporting, it's something that I'm super passionate about. And life happens. And I know that there's ways to actually maneuver your credit score in a positive direction without having negative consequences. So that's something we can talk about. If you have any questions, you can reach out to me. Now, one other thing that I'm going to talk about today is waiting for credit. So a lot of times clients will say, well, I've been working on paying off my credit cards or paying off my credit collections or whatever it may be. And I'll be ready in 6 months from now, or I'll be ready at tax time when the tax monies come in. And what I will say is there are options that you could do a personal loan, restructure debt, things like that. And usually what I try to do is I point clients in the right direction. So here are some things that I've seen other clients do. The other thing that I would say is there's a cost to waiting. So last year we saw home values go up craziness. It went up 20%, and with that was kind of unprecedented, right? But you would think in the news media, what they are saying is, oh my gosh, values are down and all that sort of thing. And that's not true. Really what we have seen in Washington County specifically is values have been up, and it depends on which service you look at. Zillow says 9.9, Redfin says 12.3, Realtor.com says 13%. So, okay, somewhere in between all that is the truth. And let's just say it's 9%. Let's just say that Zillow's right and it's 9%. If you are looking at a $500,000 property and we're looking at values going up, that means that you're going to be looking at trying to buy the same house next year for $520,000, $530,000, $550,000 when it would have been $500,000 this year. So there's a cost to waiting. Don't wait. Right now we are in a very unique period, and when we look through history of what things can come up and gosh, I wish I could have bought then, we're in it right now. That means that right now you can get potential closing cost credits, potential buy downs covered by the seller, items that would be normally in a competitive market not available. Now, for those of you that would say, let's wait till next year, let's talk about that, because if you wait till next year, even if the market went up an average of 5%, that's a significant amount and makes a difference in your payments. So don't wait. If you are even looking at buying a home, and even if you're credit challenged, get in today, and then we can talk about ways that we can get a lower interest rate for you right now versus waiting until next year. So all things credit, I am really passionate about that, and it's something that I help clients with all the time. Give me a call. Let's talk about it. Let's see if we can get you into a home of your own. Again, I'm Dawn Robbins with Nations Lending, and give me a call. I hope to talk to you soon. Ooh, one little bonus thing that I forgot to mention, we do partner with some credit reporting companies, and there are good ones out there. There are some not so good ones out there. So if you are in a situation where there's some significant things that we need to do, some things that need some legal backing to help dispute, etc., that's where I might recommend a credit reporting company to step in and help walk through that process of getting things cleared up on your credit, because everything's negotiable. There's some things that we can actually fix easy. There's some things that aren't legal to be on your report anymore, and these are the guys that are specialists in it. There are some companies out there, and I can't say specific names, that I would not recommend, but if they are charging you month over month and they are saying that they will only address one item at a time, it's a scam. Run away. If you'd like some ideas on which companies to use, give me a call. All right? I look forward to helping you, and in any case, I'm happy to talk about it because it's something that I really enjoy and I want to help people, so give me a call.